I'm going to debunk 3 lies that you've been told about money. 1, you should stay away from credit cards. 2, invest in a rental property early in your life. And 3, that you should buy a home, don't rent. So number 1, stay away from credit cards. And we get it. Dave Ramsey, right? Some people need the discipline to get out of debt, to not use credit cards and just, use your debit card, use cash, don't go into more debt. But here's the thing. This one, it really isn't that hard. If you're not using a credit card, you're really just leaving money on the table. Okay, so pay for all of your expenses on a credit card. The important one, pay your balance off every single month. And in doing that, you get all the points and cash back benefits that come from that credit card. It costs you nothing, but now you have points for free plane tickets, hotels, travel, cash back, whatever you want. The important part is just pay off that balance each month and don't get caught in the trap of paying interest month after month because you just let it build up. Okay, number 2, buy an investment property early in life. Real estate, it's the best way to build wealth. It's a fact. I'm not arguing that, but it is not the best way to generate cash flow. If your cash flow is tight, focus on starting a business or a side hustle to earn more money, then dump it into real estate. You can earn a lot more cash each month betting on yourself, and then later in life, put that in something passive where you don't have to think about it like real estate, which generates you, a couple $1,000s per month on rent. And number 3, this is the controversial one. Here we go. Invest in buying a home, don't rent. Okay, now most people believe that home ownership is the end-all be-all. They see their home as a significant investment, but here's the thing, your home isn't an investment in simply where you live. It's something that makes you feel good. People are quick to be like, you're so dumb. I bought my house for this price. I turned around and I sold it for this multiple over here. But many homeowners fail to account for the maintenance costs. If the roof needs an upgrade, that expense bites into your profitability. And that's not even bringing into account the time spent doing the repairs yourself or managing contractors, the mental weight. And yeah, let's not even forget to talk about things like property taxes, your mortgage, insurance costs, all of these things that build up and bite into your profitability as an investment. Money also continues to lose value each year due to inflation. $100,000 in 1980 was very different from $100,000 in today's money. And it's possible to make some profits or even break even, especially in some specific markets. But most homeowners don't do much more than mediocre returns that don't compare to what you can get in the market. This lie that an owner-occupied home is a good investment is just peddled by the people who are incentivized for you to actually go and buy a home, the bankers, the real estate agents, right, who want to say, hey, go buy a home and we make big profits on our end. At the end of the day, all your money is tied up in property that doesn't yield much returns. This is why some entrepreneurs and business owners rent rather than buy a home. All of that extra money can go towards your business or portfolio, and you avoid the cost of expensive repairs, insurance, all that stuff that we just talked about. Obviously, home ownership gives you much more control over your property, and you can't get kicked out unless you willingly move. I own a home. It makes me happy, but just don't call it an investment.